Hello, Warriors. Alexander, Jorge, Ren, how are you? Kevin, how's it going? Good morning, Arena. Brock, how are you? Hugo, Sinatra, Marco, everybody, how's everyone doing? Great day to be a bear. Okay, Bitcoin did achieve my target. Anyone remember what I was talking about on the downside? What my target was? Hi, Paul. 36,000. So within 200 bucks. 36,000. Okay. So I don't think I'd be short Bitcoin anymore. Yesterday's Turnaround Tuesday suggestions and candidates were short side of Aussie. That's working. Just holding this 200-day, but kind of took out the bear flag here. Blake has a great silver short on a pattern in play. And yesterday I showed gold being at the 50% level right up here. Gold actually holding up better than silver. See, that went right to the 1874 level and came off, and then silver came off from the 78.6 level to the pip. Hello, Paul. And the oil, after cleaning out the stops right here, is selling off. See this? That was another suggestion for Turnaround Tuesday. Anyone catch the metals, Aussie, oil? Only thing I missed was S&Ps. That better turn here. NASDAQ's on the verge of making a new low. So looks like this so far is a failing rally unless we get a turnaround Wednesday here and get something like this before we make new lows. Okay. Yen starting to fade, but still a little bit constructive. And gosh, even Canada's up 18 pips. Again, the relative strength in the currency complex is still the euro. See, RSI is still above 70. Whereas yesterday I pointed out that cable was diverging right here and it's come off. But I showed the weakest recovery was Aussie. And we've broken down out of this little flag pattern and measures 76, 75, 80. Okay. Hope that some of my, thank you, Scott. Hope that some of my ideas were able to help you this week. Anyone short the Aussie or oil yesterday? If you did, anyone out there? Okay. Oh, that's right. Scott sold Ethereum in Aussie terms. Okay. So that's it. I mean, what a great day to be a bear. You know, I showed this black line in Bitcoin, and, you know, we are starting to get a little divergence, but Euro Aussie, so that's working nice for you, Ren. Congratulations. And Blake got short right up here in the silver. Nice move. That's a pro move up there. So he was talking about all the resistance as well up here, and he was talking about the resistance in the currencies. So S&P's been working for you. Congratulations. I caught the first wave. I actually came in. Ben, you thought it would be a failing rally. You know, we talked about this last week, Ben. Good call so far, unless they turn it here. They turn it here, we could, you know, we're way under the off number. The off number's up here, 42.33. But you can't rule it out that, you know, you had a nice rally, you're pulling back 61.8, 78.6, and you're expecting it to go lower. Okay. Everything can happen. So I have Katie Stockton with us today. She's an excellent technician. She'll be with us at the bottom of the hour. And without further ado, I'll bring Blake in. And Blake, nice pip in the silver.
Oh, thanks, Dale. I appreciate it.
I know that you didn't. You probably blocked Stelios from seeing that recommendation.
We talked about.
Stella,
we said yesterday here on Face, right? We said that it's quite likely we're going to get a pullback, and look, we got it.
Yeah.
Well done, Blake.
I thought it was illegal to short the metals here.
It
On
pretty
Face,
much is.
I feel like a criminal when I'm bearish on the metals here.
And you know, you have to really.
And I am, huh?
You really have to look at Stelios. Like he, you know, I remember when, you know, silver
$10.
Yeah, it was $10 or whatever, and he's just like, it's going higher, guys. I mean, he would just, I mean, every day, you know, we'd be at, you know, $15, $14, and you know, for years. I mean, you know, when we were in the teens, he's just like, guys, that's going higher. So Stelios has always been right being a silver bull, but he said it yesterday, you know, hey, we might have a pullback. And, you know, technically silver was setting up, but you know, what's the bigger setup has been cryptocurrencies. And, you know, we've seen this move. Oh, I should probably take over the charts. I was thinking I was showing the charts.
No, go ahead, buddy. Yeah. So, you know, I was talking 36. It got within $200 of it.
Yeah, that's a great call, Dale. And, you know, here's the thing about Bitcoin too. I mean, you know, there's the, here's the 200-day moving average. We're below it. You know, we just hit 127% extension of, you know, this is the bull bear line to the high. We just literally hit the 127% extension, right? At, you know, this 36,000 level. So great call. I think that while we're below, you know, 43,000, you've got to stay on the short side and just realize, I mean, this is one of those things. I know we talk a lot about Bitcoin and, you know.
Well, you said you'd be able to buy it at 20K for an investment.
I do think we'll be able to get it at 20K. The thing is, it's just the destruction it'll take, or the destruction it'll cause on a move to 20,000 or even below 20,000. And I think there's a risk now that, you know, you start really selling off here. It's gonna affect
margin calls and everything.
Margin calls, and it could be in everything. And yeah, I do believe that. And it's sentiment too. There's a reason why the Fed, our Federal Reserve, you know what their most valuable tool in their toolbox is? Jawboning. Yeah, it's jawboning. It's not monetary policy, right? It's setting the stage. And so when you lose, because they know and they understand, and I think the market understands. Well, those of us have been in it for long enough, we all understand that when sentiment shifts, it's hard to. That's the genie that's hard to put back in the bottle, right? Yeah.
So important level. Do you have any important level here, Blake, in the S&P from on this pullback here? Nasdaq's almost made a new low, but S&Ps still have a higher low from last week.
Yeah, you know, like I look at equities, and I'm not super worried about equities here. I mean, do I think that, you know? Do I think that we're going down? I mean, we're at the 50-day moving average right now, and I think below 4,000, you start really, you know, shaking the trees a little bit. But it's like you know, you look at the S&Ps and you're like, okay, are we going to 2,000 again? Probably not. You know, and realistically, if S&Ps break through 4,000, we might we might see 37, 3,600, and we might get that, the shake the tree, pull back towards, 3,600 and find some sort of support there. I mean, what's really going to happen? You know what I mean?
Yeah.
I just don't see it as being really, you're gonna see some margin call selling. I believe you're gonna have some institutional selling that comes into play through the Bitcoin sales. But it's like, what's really gonna? I mean, is it going to be that aggressive? I don't know, but I think
they taking a doggy coin down with it. I don't have.
Oh yeah, Dogecoin's going down. I mean, Dogecoin.
Where's it at? 40 cents, 30 cents,
37 cents. I mean, it's making lower lows and higher lows.
Yeah.
So that's that. And if you haven't seen Ethereum slid through the 618. We actually dropped all the way down just moments ago. Wow, we went down to 2,500. If you read the analysis here in Ethereum, let me just pull that up here on ForexAnalytix. The risk of a move below, this is just
yesterday. This morning.
An hour ago. Yeah. The risk of a move below 25.26. And that happened pretty quick.
Yeah.
I mean, I posted that analysis literally an hour ago, and we were like right here, and we went through it like within minutes of me posting that. I mean, where were we? I mean, we were at 27.34. So wow. I mean, that's pretty wild, isn't it, Dale?
Yeah.
Right. Yeah. We were right here when I posted that analysis right here. And after I posted that analysis and it went out,
you had to update it before you posted it.
It literally dropped 10% after I sent that out. That's amazing. Not amazing like my analysis. It's just analysis, but the move is crazy. And think about think about the wreckage that happens here in this crypto space. It's taking a lot of institutional money with it, and a lot of retail money too. And you have to imagine there's a ton of people that are buying these dips. I can't express to you guys the experience that myself and Dale has gone through over the years. And especially in the .com bubbles, I've watched the destruction. I mean, when you watch companies like, just
WorldCom.
You take a MindSpring.
Enron.
You guys don't remember? That was a company that was like AOL. Enron. DJ just said Enron, but that wasn't during the .com bubble.
No, that was another fraud.
Enron was a secluded case, but that was one too. But you just watch those types of companies that, or asset classes that people are like, there's no way it's going down. Like you look at Ethereum and you're like, okay, it's at 4,200. There is no way it's going back to 100. No way. So, it's going to bounce here, and it's going to bounce. It's going to bounce here, and it's going to bounce here, and it's going to bounce here. And, I've seen it, and I'll watch it, and I've watched people just put everything they own into moves that look like this.
I was just going to say, there's so many people who have been long these from a lot lower. And they're all like, I know a few, and they're it's same as the .com era, where they said, look, I'm just going to add now because this is wrong. This is the new paradigm. We're going a lot higher, end of story. And that's where things get really messy.
Yeah. And look, I'm not saying that it's going to zero. And I can't, that's a bold call, and I'm not willing to make that call. But I look around, I try to, I drew that. I'm sorry. I'm sitting there trying to clear the drawings here from That was my drawing. I thought I was doing this on Zoom. But I've seen this behavior before in .com. And I'm not saying that it's for sure going to happen here, but boy, I tell you, you take some of these altcoins, and there's an analyst out there who, by the way, I'm super excited. I got connected with yesterday. He's, in my opinion, probably the best analyst and one of the best traders. Actually, he's not an economist. He's a strategist for one of the biggest banks on the earth, and he's like their technical kind of macro trading strategist. And he's the best I've ever. I got to tell you guys this really quick story. He's first of all, I don't get what do they call when you see like a movie
star or something. Yeah. Starstruck.
Yeah, starstruck. I don't get starstruck. I remember I had Tiger Woods.
I'm a mind reader.
Yeah, you are. Look, I'm a golfer. I've golfed, since I was like my teens, and I had Tiger Woods standing behind me, and back when he was married and before his wife was pregnant, and he was standing right behind me in a restaurant in Dallas, Texas, and I turn around and I'm like, oh my God, it's Tiger Woods. That's cool. And I'm not even as starstruck as I am with this guy, this trader guy. He's just awesome, right? And the reason why I'm so excited about this is because actually I got connected with him yesterday from one of our traders that was in our chat room 10 years ago. His name is Lauren, and Lauren actually went to go work for TD Ameritrade because he's in Canada. He went to go work for TD Ameritrade about 8 years ago. He stopped. He couldn't be in our chat room anymore because he went to a trading desk, FX trading desk in Canada. And then since then, he's now a portfolio manager for a big hedge fund. And this strategist they have a banking relationship, and they're friends. And so he connected me with him. And it's so cool because I'm hoping I'm going to bring him on for interviews on Trader Summit. He doesn't have a huge social media experience, social media presence. Yeah. But his daily analysis from his bank is awesome.
The best.
Anyway, he might be a guest with us here, or I've been emailing him. Anyway, he said something yesterday, which is really important. And he's like, the crypto crowd is now figuring out that, the unlimited amount of cryptocurrencies out there is not going to make you money. He said it in a more eloquent way, but it's like, how many altcoins are there? I mean, I don't know.
I think we passed 10,000, if I'm not mistaken.
Okay. So out of those 10,000 coins, what's going to happen with all those coins? Do you think that there's just unlimited amounts of money that are just continued by coins that are unlimited in nature? Or do you think we just keep creating coins and keep creating coins? I mean, what do you guys think is going to happen?
There has to be some kind of consolidation, which means a lot of these coins are going to cease to exist or become negligible, basically. That's my view. I mean, I could be wrong, but that's what I think is going to happen.
Yeah, just, think about that for a moment, guys. Just think about it. And it's like, and I mean, if you're on TradingView and you just start, you just go over to crypto, and then let's delete that. And then you just start going through all the crypto, like, what are these? What is this? What is all this stuff? And then you start looking at all the different coins out there. Oh my Lord. And all of these different coins and all these different things are just attracting money from all over the place. From where? Like who? Like at some point you have oversaturation. I think that's the point that we're at right now. Is does the blockchain have some value? Sure. I don't know where it is. Honestly, I don't know, but I know we're past the point of no return as far as the issuance of all these really
like do you know what gets me? Sorry to interrupt. What gets me is that I've had friends of mine and friends of friends ask me, or they're like, "Oh, you're a trader. What's the next crypto coin that's going to explode higher?" And I'm like, "What do you mean? Which coin has the different characteristics that's going to make it more useful?" No. Which one is going higher? That's the question. And I'm like, "What do you mean? You just want to gamble on a name?" And they're like, "Yes, I want to make money. Which one is it?" I'm like, "I have no clue."
It's wild, right? So look, I think that the risk is really high that we continue to see a slide in crypto, and the destruction that it brings in this in its wake will be interesting, and I don't know what the fallout's going to be. I just don't know. But I can't imagine that it's going to be pretty, because it is all about sentiment, right? And I know I've pointed this out in every week ahead video that we've had for the last month and a half. You have to keep, or probably 2 months, you just have to keep an eye on cryptocurrency, because it is really the most riskiest asset class out there. And as I've said the last few months, I'm not going to tell you that Bitcoin is a risky investment or a trade to buy now or later. It is by far, though, the most riskiest investment you can make, because it is unproven. It's like Netflix. It's like Netflix in a tech run. It's the asset that you think is going to have the most growth or the most exposed. It is the poster child of taking risk right now. Cryptocurrency is. And so as it slides, it weighs on sentiment. And then people start going, "Oh shit, shoot, excuse me, sorry, my language." They start seeing other, assets and saying, "You know what, I don't really want to be long, this." It's kind of risky too, being long the Aussie dollar, because that's a growth currency, or it's it's a commodity currency that's associated with growth. And maybe we've had peak inflation here with lumber, sliding, 30% over the last, a week. Oh shoot, I need to sell Aussie dollars. You see how the sentiment can start to weigh on other things too. So that's why it's really important. Now, I want to talk a little bit about this, Stelios. I think Steve is stuck in traffic right now. So, and Dale, we should talk about, we have the FOMC minutes, and I had one of our traders yesterday in the daily roundup. We were talking about the US dollar Canadian and the dollar Canadian reversal yesterday. And if you didn't read the blog, which is free, if you go to ForexAnalytix and you go, or, even better yet, you go to Trader Summit, and here it's right here, the dollar Canadian nearing key long-term support. This is last week. Talked about the double top and, about the move. And like I've told you guys here, I'm not sold on the idea that we're going to be forging a double top and seeing 95 cents again or 92 cents. I'm just not in that headspace. But we saw the dollar Canadian go to 20, which 120, which, thought that is possible, right? But we bounced yesterday because of the, crude oil move, the news on Iran and whatnot. There's a reason why I'm telling you all this. So the dollar Canadian has bounced. Now, the question that we have now is, the question I got yesterday was, "Hey, Blake, the FOMC meeting minutes are tomorrow. Are you afraid of buying the dollar ahead of the FOMC minutes?" Do you know what my response to him was yesterday? Not really. And here's the reason why. Do you think at this moment the FOMC could be any more dovish? The minutes, the governors could be any more dovish than Fed Chairman Powell. Fed Chairman Powell said, "We are not even twitching about thinking about thinking, about talking, about raising rates. So he hasn't even had his first twitch about thinking about raising rates, right?
Yep.
So if he isn't even thinking about talking about, debating about tapering rates in the future, how the hell is the rest of the FOMC and the rest of the board going to be more dovish than that? I don't know. I don't think it's even possible at this point.
Exactly. What can they say that's more dovish? Actually, they could cut rates further and increase QE, but that's not
they could. Okay, so but wouldn't you say that the risk now is that you have some of the regional Fed governors? We read about their minutes. This is their meeting from 2 weeks ago. We read in their minutes that, oh, this Fed governor is actually kind of bullish or hawkish, excuse me. Oh, this Fed governor is actually talking about their region as being employment pictures much better than we had thought. The risk is you got these murmurings from other regional Fed governors that are actually a little bit more hawkish, that actually can start to alter what the message of the Fed chairman is. So I'm not sold on the idea that I think the risk is that the actual minutes could actually read maybe even a little bit more hawkish than uber dovish, because that's what the market expects is uber dovish. I mean, because how can the Fed governor even be, he's got to be super uber dovish like he is, because all the regional Fed governors must be super uber dovish. And try saying that 10 times fast. Anyway.
One thing I want to point out is that we have to also see what the market's pricing, and we're pricing 125 base point hike by end of next year. That's 18 months from now, and another in mid 2023. So that's the benchmark that we need to pass in order for the market to actually, for the dollar to strengthen. So that's interesting. Actually, I also want to answer something that Len just wrote here. The Bund tagged the 200-week moving average today. Yes, I've taken off half my position, my short Bund. I wrote that in the chat room earlier today for whoever is a
man. And I have to tell you, Stelios, that has been, the trade of the last month. And I know you've been short Bunds for like the last month. And here we are. I mean, we're pretty key support. We're trading at the lows from 2019. I actually think we're going lower, but I think it makes sense because obviously the daily relative strength is oversold. And this is, we're getting in one of those situations where you're starting to see, the cryptocurrencies roll over. You're starting to see risk roll over. At what point do people go, oh, whether you or not you believe in, treasuries, whether it's, German issuance or US treasuries, but at some point you go, okay, I need some safety. So I'm going to buy some, Bunds, or I'm going to buy bonds, or yields are going to go down from here. But great call, Stelios. We are below multi-year lows now. I mean,
I still have half of the position, but I just took half off today, just being a little bit cautious. That's all.
No flight to quality. There was nowhere to hide, really.
There's something to be said for that, right, Dale? When when the proverbial poop hits the fan, people start looking. And so, hey guys, we got CPI coming out in Canada just in a few minutes. We should watch it because the Canadian's leaking, and no pun intended, but news in Canada, in my experience over the last 15 years of watching Canadian news releases, like really closely, and all the commentary that comes after that, I think the market gets leaked, the Canadian news more times than not. So watch it for a high print out of Canadian CPI right now. That's what I'd be thinking.
Canada and the UK are notorious, but yeah.
And Katie, we see you after this. We'll get you going.
Great.
All right, so
what are
stand by. Here comes the data. Should be. By the way, it's my son's 14th birthday. My youngest kid is 14.
Happy birthday.
Yeah, thanks. It's like, oh my God. What happened? Where did that go?
All
I
right.
gotta get my donuts. Here we go.
Not yet. Oh, it's okay. CPI year on year 3.4 versus 3.2. So it's
wow. Hey, Canadian CPI is strong. No one knew that. No, 0 people knew that. So watch, you're going to see that little dip below the support, and now you're going to see it rally back to 120.70. That's my opinion. I just bought a little bit here. Thank you. So I know how I mean, you know, you guys have seen this happen before. It's not, this isn't anything new to us, that we watch this Canadian data. Like I said, slip below the lows. Everybody already knew it was going to be strong. We dropped from, you know, 2075, you know, and the data was, you know, very strong inflation data, pushed through support, and we're probably going to bounce back to 120.70, 120.80. All right, guys. I want to say thank you all for your support and always being here. And you know, also if you want to show support, make sure you visit our webinar sponsor. We do have our webinar sponsors is being Pepperstone Securities, which if you want to try to get ForexAnalytix for free for a few months and come in our chat room, open up a Pepperstone account if you're outside the US or Canada. They are one of the larger FX brokers in the world, and you have to open your account through here. And then if you're a US-based trader, open your accounts through Forest Park FX because they can help you get cash back in your trading. We've been working with them for years, and so they're awesome group to deal with. And by the way, and check out all the stuff that we do here at Traders Summit. Just because we post new, you know, ideas. This is like one of those great locations where if you want to get briefed for today, I mean, come over here and you can read, you know, from Mark Chandler. You can read, you know, good trade setups. You can read what, you know, Boris and Kathy have to say at BK Asset Management. You know, you can read it all like right here in one centralized location. It's tradersummit.net. All right, guys. Dale, thank you very much. And hopefully you guys picked up some dollar Canadian there below 60 because now it's at 70. So
nice fade, Blake.
Thanks.
Very nice.
Real-time action. All right.
All right, guys.
Thank you, Blake. Good hunting.
And thank you guys for all the happy birthdays for my son. It's amazing. Thank you. Appreciate it.
You're a good dad, a good trader, and a good dad. So,
you know what? Wait.
Huh?
I'm sorry. I'm not that good because he's still holding his cryptocurrency. So I told him till I blew in the face, hey, you shouldn't be long. And you know, so I ain't that good of a dad. But sorry.
Well, yeah, he's like you. He's an independent thinker.
He is. I can't. What can you do? All right. See ya.
Hello, Katie. Katie Stockton is with us. Welcome back, Katie.
Thanks so much. It's good to be back with you guys.
What a day to be back too, huh? I mean, a lot of red ink out there. Crypto, equities, metals, a lot of liquidation going on. Going to share your screen with us, Katie?
Yeah, I can do that.
Your great charts.
It's definitely risk off just about everywhere, isn't it?
Yeah.
You know, and we're primarily equity focused, but you see it as mentioned in the cryptocurrencies. And I've actually been watching the cryptocurrencies. Let me see if this is working. Do you see my screen here?
Yeah, got it up there.
Wonderful. So, you know, I was watching them really for months now, just as an indication of kind of retail sentiment. And of course, now it looks like we've had a crack in that. And with that, the pullbacks that are underway, to me, they're healthy longer term, but that doesn't minimize the losses that folks have suffered, right? With Bitcoin down, at least based on this Bloomberg data, more than 40% off of its high, right? So this is pretty significant. And you can see there are sort of head and shoulders type setups, and that's not limited to cryptocurrencies. We're seeing more of that on the equity front. And that certainly differentiates the current pullback from the pullbacks that we've seen year to date. It makes it worse. And it also reflects a greater loss of intermediate term momentum that we haven't seen yet this year. So I do think it's more significant. I think the downside isn't going to be what we saw for equities, at least in early 2020. but we are in the mode where we don't feel like we found a footing as of yet. And there's a lot of, key levels sort of in play for the major indices.
What do you think? Run of the mill, 5%, 10% correction here, Katie, from the highs?
Yeah, that's what we've been calling for, 5 to 10% or so, a little bit more for growthier indices like the NASDAQ 100 index. And with that, you tend to see relief from intermediate term overbought conditions. We just don't have that yet. So here's a chart of the S&P 500, a daily bar with the trusty cloud model that you see here. The green line is the 50-day moving average. We're expecting that to be broken based on primarily the stochastics, which if you look at the S&P futures this morning, you already have a downturn in the stochastics here that reflects a loss of intraday momentum that became evident yesterday in the afternoon. And that suggests we'll take out the 50-day and probably get into cloud-based support before this pullback can really mature. The bottom boundary of the cloud right now is 39.57, and it's moving slowly higher over time. That's about that's 6 to 7% off the high.
Okay. Nice look on S&Ps. What else is on the radar?
A lot. I mean, listen, we're watching commodities, of course, very closely.
Yeah.
Most interestingly this week is gold. Gold has cleared, I'm going to pull it up slowly here. Gold has cleared not only its 200-day moving average, really for the first time since breaking below in January, but also you can see this downtrend channel. So here's the breakout above the 200-day. It stopped out a DeMark sell signal. So that's information in and of itself. It says that it doesn't need to react to these overbought conditions. And so in our weekly report, we highlighted GDX as one way to take advantage of this. We're generally speaking somewhat hedged right now from a top-down perspective, but we're still open to opportunities that are a little bit more defensive or value-oriented, areas where there are breakouts or any kind of fresh catalyst like you have here for gold. So this has been a long time coming, I think, with this downtrend channel. And I do think it's significant from an intermediate term perspective.
Okay, where would it come back within that channel, Katie? Around 1860? Was that the level it broke out of that channel?
Yeah, so it was about 1850 was the level that I had on my radar. And you just want to see it kind of hold up around here for a week or two to really confirm that breakout. That's what we always like to see, that sort of time and price filter. The 50-day moving average will probably become a decent gauge of support going forward, although a pullback doesn't appear imminent. And then the next resistance we can use just to go back to these highs, sort of 1970 is the level that I highlighted this morning. At the same time, we're seeing some signs of downside exhaustion in the dollar index based on the DeMark indicators. And this is really, for the 4% downdraft that we've seen for the DXY. It's the first counter trend signal that we've really gotten from these DeMark indicators. And it does suggest that we'll get some kind of stabilization around this January low. So you can see here a DeMark signal. That's a short-term oversold counter trend reading. And that suggests we'll get an oversold bounce here. And you can see more of the same from another one of Tom DeMark's models. So I do think that we'll see some kind of stabilization here in the dollar. Perhaps
back to the cloud, maybe the bottom of the cloud comes in where?
Yeah,
91 and a half.
Yeah, 91.60. So I think that's pretty realistic for it in terms of a relief rally or oversold bounce.
Okay. Can you go back to the S&P, because I noticed something on your DeMark count. It was one with the cloud. I wanted to ask you about it.
Yep. And what we noticed during while it's pulling up, when the NASDAQ 100 pulled back into last week, we did see some counter trend short-term oversold signals, and that's gotten us exactly what we've gotten this week. Which one is it? These are the daily charts here.
I think it was the S&Ps where we didn't quite get, I think the top left-hand corner where 11 is the last count. Oh, and then you have 1, 2, 3. Don't they normally top on a 13?
They do. So the 13s are your so-called sell signals, and if they don't, this was the last 13 sell based on this model. If they don't unfold, within a 12 bar count, then it basically stops out that signal. So this one was stopped out effectively. The 11 is something that really holds no information, at least in my work.
So
because
could we have another high to get a 13 count on that?
oh yeah, I mean anything could happen, but it's
Uh,
not really predictive in that sense. Notice here, by the way, that the TD
12.
sequential model is on a 12, right? So it
Okay.
just needs to get above this bar 8 back here. So it's pretty close to flashing a 13, but it's
Okay.
not really predictive. I'm giving more weight right now to the momentum gauges, which you can see on a short-term basis are very much pointing lower. This is the
Okay.
daily MACD indicator, so I defer to that as opposed to waiting for that DeMark sell signal. A lot of peaks are associated with them, but certainly not all peaks.
Okay. Appreciate that lesson.
Mhm.
The oil sector has been one of the leadership sectors, going from worst to one of the best, and crude. They put in a little bit of a down day yesterday with some follow through. That's probably not even close to giving any kind of self or a trend follower. But
Mhm.
any view on energy here?
Yeah, I mean, I'm overweight the sector relative
Okay.
to the S&P 500, and that's based on the long-term turnaround and more recently a higher low within that relative strength ratio. Now, it's benefiting in part from the loss of relative strength behind the technology sector that's been prevalent, and really that's allowed a lot of other sectors to garner some relative performance. So this is our weekly report that we published this morning. You can see on, let's see, energy here. This is one of the green boundaries are overweight. So we're overweight most cyclicals, energy, financials, newly upgraded healthcare as it comes off its lows, industrials, materials, and real estate. And really that's all because we've seen that loss of relative strength from the technology sector. I do think it continues over the intermediate term. However, what I will say on crude oil, which we also highlighted in this weekly report, you can see it's come into this resistance, and this resistance goes way back. It's $66 to $67 per barrel, and it has some signs of exhaustion there. You can see it in the DeMark work. You can see it in the stochastics. It's within the framework of positive, but not exactly, expanding intermediate term momentum. So we need a breakout. In other words, we need it to see a decisive move above $67 per barrel, and that will get us a nice catalyst for crude oil prices and also for the related stocks. We saw natural gas perk up a little bit in the last few days and clear some long-term resistance. So I think there are some indications that we'll get breakouts. We just wouldn't act on those breakouts before they happen. We'll wait for them to really confirm, just given the risk off tape.
What's your self-talk, Katie, when you believe 100% that it's going to confirm, and you go, well, if I get in here, I'll have a lead into the signal. What do you tell yourself now so you don't do that?
Oh yeah, like to get ahead of it, right?
Yeah, get an edge, before the candle closes, before you have a confirmed breakout. I know every trader out there has thought in their head. Go, what do you tell yourself?
I know, resist, right? I mean, well, that's the nature of resistance, right?
Okay.
So if you look at the nat gas, this is a great case in point. So here it was just 2 days ago. It looks like it was ready to push through, right? So by waiting for confirmation, you saved yourself. And by confirmation, you can be really tight with it and say, I just want to see consecutive daily closes above a level like this 304 for nat gas. And you wouldn't have gotten it here. You haven't gotten it here. And I think this is a great lesson. So having seen a lot of this kind of whipsaw type of activity, it just tells you you're smart to wait. I also think as it pertains to some of these DeMark indicators and MACD signals. So I can't remember who said it. One of my wonderful mentors probably said, don't anticipate the anticipators. And I love that. Right? Because they are indicators, and we don't want to get ahead of that. We want to wait until they actually indicate that signal.
Yeah. So your rule is 2 closes to confirm a breakout.
Yeah, and usually a short-term level, 2 daily closes is sufficient. But if it's a major long-term level, I really like to see 2 weekly closes above.
That is a great lesson on false breakouts and how they're happening everywhere. As the markets keep looking for liquidity. And do you believe in stop hunts, that even though it's not open outcry anymore, Katie, where everyone had the paper in their hand in the trading pits, that
Do I believe
say
in what?
algos, huh?
I missed that. What'd you say? Do I believe in?
Do you believe in stop hunts that, we'll take out a swing high, swing low for, 10 minutes and a few, and a few points, and then everyone's elected, their buy stops taken out, and then the market's underneath their buy stop.
That reveals, right, the weak holders of the market, right, or the security. And I certainly think that that's an issue. It's always hard to establish stop losses because you keep that kind of in the back of your mind. And I really, I don't like to put hard and fast stops into a system, but rather use a little discretion as I see something trading around a key level. A great example would be that I had Walmart in one of the systems that I kind of contribute to. And unfortunately, with the little pullback that preceded its earnings driven breakout, see how it dipped below the 50-day moving average here ahead of this nice move in response to earnings. Well, I got stopped out in that system because of that. So the exact reason why I was in the position was made obsolete.
Okay. Yeah, tough close to have stayed long into.
Mm-hmm. Yeah,
on where you got stopped. I mean, you didn't know what the next day was going to bring, that it was just going to turn. But
but it was just one close below, right?
Yeah, it's a game of inches, isn't it? So, anything else that's say, for example, you have a view on yields? I mean, we tried to make a move to new highs in the 10-year, and so far stalling. You think we're going to get it?
Yeah, here too, I'll show you what I featured in my weekly report, because I think it contextualizes what we've seen recently, which is really just a consolidation phase. Within this consolidation phase, we have actually short-term upside momentum behind treasury yields just based on something like a daily MACD indicator. So we are expecting a test or retest of this 179 area, which is a 50% retracement of this downtrend. But we think that test will likely be unsuccessful just given the loss of momentum, which you can see is pretty significant. This weekly MACD, which represents intermediate term momentum to us, had been on a buy signal or positive or pointing higher for so long, and now of course has flipped down. And at the same time, we had the stochastics pointing down as well. So I think it will take a lot more to get through that resistance level. However, when you look back here, these series of great breakouts, so this breakout here above the previous highs, this breakout here above the cloud, and there was also a Fibonacci retracement level that was taken out. Those breakouts suggest that beyond this consolidation phase, which I think will persist, that 213 is a realistic targeted level for later this year.
Okay. And you think we could get to 110 or back to the cloud in that moving average first? That would
I think that's stretch, a little bit of a stretch. Yeah. It's so far below. So I'm this 153 is the new support that I'm watching. It was just newly established. So a minor level, you can see it here. But really, it's the cloud, I think, that will help guide us. So here's the 153 level, and you can see it really kind of meets up with the cloud. So it really just depends on how prolonged this consolidation is. This may be somewhat hopeful. Maybe it's closer to the bottom boundary of the cloud, but I don't think it'll need to return to this weekly cloud, which is currently down 113.
Okay. I just think Friday's candle on a shocker NFP number was very telling, and no one really even talked about the way yields came back after that weak number. Markets discovered it the following week, but not that day. So we've covered a lot of different sectors. Weakness being, how about the Russell, which has not made a new high, Katie, for I don't know, 6 months.
Right. So, I mean, it's been range bound, and here too, you can see somewhat of a head and shoulders-y or sort of toppy formation that gives
sure, right.
and
the right shoulder looks like, what was the name of it? Quasimodo.
That's right.
Huh?
little hunchback here.
Is a Quasimodo top here, right? Okay.
So, and here's a breach of the cloud-based support, and you see
Yeah.
how the cloud was quite thin there. So that to us is a setback. It's really only a short-term setback at this point, but naturally there is weak intermediate-term momentum behind the Russell 2000. What I will say is that, and this is probably a chart that doesn't translate well on screen, but you can see the underperformance. This is Russell divided by the S&P 500. I have loads of DeMark signals here. And if you can see this, there's a DeMark buy signal in relative terms. So with a positive divergence in the MACD. So that would suggest that while Russell doesn't look great, it may actually outperform the S&P 500 as it pulls back. So that would be sort of a natural, development, just given its previous outperformance ahead of the corrective phase. We're also watching Apple really closely as sort of guidance for the major indices in part, but also just a very key support level that's essentially in play here. We're watching this sort of neckline of what could be a topping formation. It's aligned with the 200-day moving average. So what we don't want to see are a couple of solid closes below that 200-day moving average for Apple. And indeed, there are some indications that it will get that if you see these stochastics having rolled and quite far from oversold territory. Where we're getting more of the oversold reading, and this is still within the growth sector, is biotech. So we highlighted biotech using XBI. And I think XBI is somewhat interesting, which is a little counter to my belief that growth will still remain under pressure in relative terms. But check this out. See how XBI is oversold and seems to be kind of coming off that oversold reading. You also have the cloud nearby. So I wonder if maybe now is not the time to start sniffing around for some of these oversold biotech positions. Notice also there's a DeMark signal to support that. So if you pull up really kind of you name it, you can see that some of these indicators are set up similarly on the individual stock level. I don't want to pick on any individual name necessarily, but you're seeing just some interesting action that looks a little bit better. Well, Moderna is not a great example of that, but I think there's some interesting setups there.
I look at clouds from both sides now. And because of you, Katie. So, another great review. I love your charts, Katie. And we have a couple of attendees that are asking how they receive your weekly report. So, why don't we get to, the promotional part of the interview so people know how to follow your great work and subscribe to you.
Thanks so much, Dale. I mean, we do publish research on a daily basis. We publish.
Okay.
That's right. So daily, and then so we have a daily report, and then we have 3 different weekly reports, one of which is focused on cryptocurrencies, primarily Bitcoin and Ether, with, oh goodness, Dale, I have to show you one thing here.
Yeah, go ahead.
With some relative strength work that I don't know if you all have seen this or featured this before, but this is a relative rotation graph for the cryptocurrency space. And I just think this is really fascinating because if you can actually animate it to see trailing history. So this is some work that we've been doing on the relative strength front in crypto land. And we show some of these charts and we dig into them and the implications of that in the cryptocurrency report that we highlight weekly. We also have a sector focused report every week. And what you've already seen in this little talk with our weekly report, which is pretty comprehensive. We have long short ideas, long short ideas, sector relative strength, different themes that are actionable. It's pretty comprehensive for anyone that's trafficking in U.S. equities and, fairly consistent and with a very clear directional bias and with, description of the indicators from which it comes. So I encourage folks to check us out on either Twitter, you can get to us that way, or our website is fairleadstrategies.com and has all the information you need. And we do offer trials, free trials.
Oh, great, Katie. All right. Another great interview. I look forward to you coming back again because, you really, you get through things quickly and make major points, and your charts are interesting and clean, and your presentation's excellent. So
thank you so much, Dale.
Yeah, I want to Yeah, I want to thank you again for taking time out of your day to come and show us what you spend hours, and your whole staff and associates spend hours gathering this type of information. You have to be very hardworking to come up with comprehensive analysis like you provide. So
I appreciate that.
I recognize it, and we appreciate your giving spirit to come here and share it, Katie.
Of course, happy to. Have a good day.
All right, Katie. Everyone, Katie Stockton. Could follow her on Twitter at Stockton Katie. I think there it is, Stockton Katie. And again, you could go to fairleadstrategies.com. Katie says there are even trials, so check them out. And that's going to be a wrap, everybody. Be careful out there. Markets that are down hard could also come back. So, don't get married to a one-way street. In fact, your best marriages are two-way streets with give and receive. So remember, don't just count your pips or cryptos or gold bars or shares. Count your blessings, and we'll see everyone tomorrow. Good hunting the rest of the day, and thanks again, Katie. And you already have some people ordering them, and also, you could join the team in about, I don't know, 20 minutes for the morning edge, and I'll see everyone tomorrow. Adios. Thanks again, Katie.
Thank you.